Welcome back. Well, the market's been all over the place today, especially the last hour, really. Perhaps has been a bit of a no-trade zone last hour. The way the markets moved, the big move, of course, happened at start and then at noon, or post-noon with the short covering. And then it's really all over the place. Ashwani and Mitessh with us for BTST calls. Ashwani, your thoughts on the index and individual stock calls?
Well, the index has protected 10,650 again, but not enough to say that this is the turn. Maybe, we need some more upside before we can get confirmation. For the moment, it's 10,650, 10,750. That should hold on. Having said that, on individual stocks, go short on SBI. That's a short with a stop of 266, target of 250. PNB is a sell with a stop of 72, target of 66. And Adani Power is a buy with a stop of 38, target of 45.
Okay, so those are the stocks that Ashwani is going with. Mitessh, what's on your list for the last half an hour?
I have two sell calls. Biocon is a sell or STBT. It's moved down slightly, but around 615 would be a good sell with a stop at 621. Look for 604 as the target for Monday. And KPIT is a STBT with a stop at 110.5 for targets close to about 105 to about 104.
Okay, just a follow-up, Mitessh, on a stock like United Breweries. How do you approach it? 5% lower right now?
Yeah, I think today it's kind of given some breakdown, and with this price and volume action, the first target was 20, which has been met. I expect eventually 1320 will break, and the stock could head towards 1290 to about 1285 on the downside.
Okay, well, the flip-flop is continuing. Okay, we have again come back above 10,700 for whatever it's worth. But this is anything but inspiring. I mean, let's just wrap out the week as well. Pull up, 1 week chart or 1 month chart. 6 continuous days of selling, Anuj, from the time we hit that 11,000 top, and you were talking about how it's a hard top on the RBI policy day.
Yes.
6 continuous down days. So maybe at some point there will be a reversal, but at least this entire week there was no sign of it.
No, I think this is one of those phases that the market's just given. The market's made a top based on event, and after that one-way downward slide. I think since you said it's 6 consecutive days, today is Friday as well. There's some Friday factor as well, taking some money home. What this market's done though is it's given you a very interesting level. Today's low on both Nifty and Bank Nifty, I think now becomes sacrosanct. You've made some kind of top. Whether you've made some kind of bottom or not, you'll find out next week. On that, I think today's low would be the sacrosanct level, and it's very close to the last low as well, 10,650 thereabouts. So that way, that's very important. But I think the confidence will not come back till the time you start to see some kind of participation in the mid-cap. The index can stay. You remember we went through the period October end where the market fell a lot, but towards the end, the mid-caps refused to fall. They started making some kind of base, and after that we had a very strong November and December rally. I think what this market needs is something like that, where the market perhaps does not rally a lot, does not fall a lot, but at least the broader market stops falling. Every day to see mid-cap index down 1%, to see advanced decline at 1:2 is not going to inspire any confidence. That part of bloodletting, I think, that has to stop for this market to feel confident.
Absolutely. Let's see when that turn comes around. Doesn't look like it's happening today for sure. Look at that advanced decline line. It's absolutely spreading far wide apart. On that note, let's get you some more opinion on the fundamental side. Earlier in the day, we caught up with Andrew Holland of Avendus Capital Alternative Strategies. Got his call on the market along with the top sectoral bets. Andrew is fairly cautious on this market.
There's individual stocks you can look at, but the index is, to my mind, is not a great indicator of the pain that's out there underneath, particularly in mid and small caps. I read today that one fund is actually deferring its dividend because it can't sell small cap stocks. So I think it's just going to get exacerbated. And the next stop for the index is probably 10,500, and then we'll see what damage is being caused around then. The global, economic data just looks absolutely awful. So I don't think there's any support there. So we're all hanging on a US-China trade deal and what that can bring. But again, I think the damage has been done in all the tariffs that have been there. And if I look at the US retail sales for December, then that tells you the story that you need to know, that the US is in recession, Germany is next, Italy is already there, and the UK just kick the can down the road to make sure that they're going to be in recession too.
That would be fairly fertile terrain for an alternate strategy player like you, right? Where are you going to short, or already short? Yeah,
so I mean, obviously, the index and obviously, certain sectors, have become more vulnerable, and obviously the results season give you a great opportunities as well, where stocks have either had poor results or reasonable results, or markets are just interpreting those results because it was better than analysts forecast slightly. But people forget that those forecasts were kind of marked down quite considerably before the results anyway. So you go back to the normal fundamentals, and I'm afraid that most analysts for a lot of the sectors, and I'm going to maybe say autos in particular, still have to get their red pen out and slash forecasts. Because the margin pressure is going to be absolutely horrendously large for all of them. So just expect the whole sector to be downgraded by earnings first, and share prices will probably tell you that's what's going to happen anyway.
In the auto space, we are seeing some signs of hope, at least in names like Ashok Leyland, etc., where margins are not as bad as feared. Even if they don't get better, you don't think that the worst is over for some of these companies?
No, I don't. And I think the problem is, you just think about this, is that they've been enjoying, double-digit growth, and now they're not. And that's going to have the reverse in terms of operational gearing. And what they'll do, and what they'll all do, is they'll start spending more money on advertising or discounting, reducing prices. So you're going to get that nice trade war, price war within each of the sectors, which will just really hurt margins. And I don't think the market's taking that into account yet. So I think there's another 15 to 20% reduction in at least profit forecasts for most of the companies.
Okay, Andrew, financials, what's the approach from here on? Select NBFCs have done well, like Muthoot. Now you have, of course, Yes Bank also coming back into contention. We've seen a big rally play out in Axis, though ICICI Bank has slipped. So it's all over the place, really. Your thoughts on this basket?
Yeah, I mean, boringly, Anuj, we still like the private banks, and we're still sticking to that. I think there is an interesting change going on with all the different management or new management coming in at most of the banks. And I think that will change the kind of pecking order over the next few years. So there is an opportunity to pick some winners from that. Which is what we're doing more work on, and seeing who the teams that are being kind of put together. Certainly, for Axis Bank, they are putting together, it seems, a good team. We'll see what the new management at Yes does as well. I still, my problem is this: is I think there's a second wave. I talked about it last time on the day of the credit policy. There's a second wave of problems sweeping through the NBFC and real estate sector, and I don't think they're going away this time. I think we increased stamp duty here in Bombay by 1%. I'm sure that's not going to go great guns for the real estate companies. So, if markets fall, a lot of things come from underneath the carpet, and I'm afraid that's going to be in the real estate sector, and that's going to spook markets. And you're seeing it in share prices of some of the NBFCs, which fundamentally, 6 months ago everyone was liking, and now are kind of thinking, why is the share price, more than halved over that period?